Look, I think Bitcoin could go up 10x by 2030. So I would start with Bitcoin. I think it's dramatically undervalued versus the scalable market it's going after. I think you could see Bitcoin north of $1 million in 5 years. So maybe start with Bitcoin. If you're looking for an asset that's like dramatically undervalued that could re-rate north but faces a lot of risk, I would look at some of the OG DeFi protocols. Even something like Aave, which is facing some really significant risk right now, but is an enormously important DeFi application. It has the same market cap as Papa John's Pizza. Is that right in the world? I'm not sure that's right in the world. So look, I think Aave could be dramatically undervalued. That doesn't mean it won't continue to face trouble and it's not at risk. High risk, high reward. But if you're looking for something that could 5x or 10x quickly, I think some of those OG DeFi apps fit that bill.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Hougan identifies institutional inflows as the single most important driver for crypto over the next several years. This is not speculative money. It behaves very differently from retail capital. Retail tends to chase momentum and exit during downturns. Institutional investors, by contrast, enter slowly, build positions over time, and hold through volatility. There is already evidence of this behavior. Even during major drawdowns, when Bitcoin has dropped 50% or more, most institutional capital has not exited the market. This is a critical shift compared to earlier cycles. The reasoning is straightforward. Institutions do not allocate to Bitcoin casually. They typically require a high level of conviction, often 80% or more, before entering. Once they commit, they are less likely to reverse course based on short-term price action. Hougan expects billions of dollars to continue flowing into crypto ETFs every month. This steady inflow creates a structural demand layer that did not exist in previous cycles.
Now, in the crypto market, there's a lot of things to look forward to. Obviously, we've got the Clarity Act that many are hoping is going to be signed off in the next couple of months, and the Fed interest rates that people are looking at as well. I mean, what macro catalysts are you specifically looking at for upside in the crypto market over the next few months?
Yeah, look, specific to the Clarity Act, the most important thing is that we get past it. I actually think that's more important than whether it passes or it fails, is that we remove the uncertainty of it, we get past it and move on to the next phase of growth. The biggest catalyst in crypto right now is just the wave of institutional capital that is coming. That just takes the passage of time. But I'll be very happy when we get past the Clarity Act. I'll be very happy when Warsh is installed as the Fed chair. I'd be happy if the Iran conflict goes away. But even if none of those things happen quickly, I think the second half of the year is shaping up extraordinarily well. There's just too much institutional capital that wants to come into this market to keep it down. So look, I think we're going to get there regardless.
When we talk about institutional capital as well, I mean, I was talking to someone just over there a few hours ago saying how quickly it could just go from 75,000 to 700,000 like that, given the amount of capital that's flowing in. Is there a scenario where that can just happen, where Bitcoin can just run for the sky?
Where you get a melt up? I mean, there's always a scenario where that's possible. I don't think that's my probable outcome. I think this is a long, slow grind kind of bull market where we move up steadily. But it is the case that there's a relatively low amount of supply on exchange. So you have to wonder where the supply is coming from. And there is just strong capital. The thing about institutional capital is it's not quite like retail capital. It comes in slowly and steadily and builds over time. And that's why I think probably the most probable scenario is less volatility and a strong march up. But make no mistake, I think billions of dollars are coming in through ETFs on a monthly basis through the end of the year. I think it'll be really significant.
And is there a scenario as well where, say, the Clarity Act doesn't go through and then the sentiment changes, and just like we've seen in previous cycles where retail has gone away, is there a scenario where institutional capital goes away and they start pulling away from crypto?
It's not what we've seen. So I'll tell you the Bitwise experience. We had essentially no outflows in 2018. We had no outflows in 2022. Most of the ETF money that came in is still there. even though the market is off 50%. The reason institutional capital is diamond hands at this point is that if you're an institution, you're allocating to Bitcoin, you're still on the outlier. So you're not gonna allocate if you're 51% confident. You're gonna wait till you're 80 or 90% confident. Every piece of data suggests that it's some of the strongest holders of crypto that exist. So I don't think we're gonna see sentiment turn on its head. Even if the Clarity Act passes, I think there'll be a wobble in the market. But the institutional bid is still coming. They know that crypto is volatile. They're orienting around adding to it. I think it's gonna come almost regardless.
And we have spoken about altcoin season before. I mean, Bitcoin in a downtrend at the moment, slightly moving up again. What's your thoughts on when altcoin season is coming, and how does the next altcoin season look to you?
Yeah, there's no altcoin season ever again that includes all coins going up. I think those eras are over. There is idiosyncratic altcoins that will do exceptionally well. You've already seen that. Hyperliquid, which is a well-designed altcoin with good tokenomics, has been doing extraordinarily well. I think what you'll see in the next year or two are select assets that are focused on DeFi, high quality layer ones, things playing into stablecoins and tokenization will do extraordinarily well. And then many other quote unquote altcoins will make their slow march to zero, which is what they deserve. So not an altcoin season, but an altcoin differentiated period where some do very well and some do very poorly.
Awesome. And just to wrap it up, I'd like to ask you a fun question. I mean, if an everyday investor here had $10,000 and they wanted to turn that into $100,000 by 2030, what sort of crypto assets should they be looking at? Is it the DeFi sector? Is there specific crypto tokens you believe?
Look, I think Bitcoin could go up 10x by 2030. So I would start with Bitcoin. I think it's dramatically undervalued versus the scalable market it's going after. I think you could see Bitcoin north of $1 million in 5 years. So maybe start with Bitcoin. If you're looking for an asset that's like dramatically undervalued that could re-rate north but faces a lot of risk, I would look at some of the OG DeFi protocols. Even something like Aave, which is facing some really significant risk right now, but is an enormously important DeFi application. It has the same market cap as Papa John's Pizza. Is that right in the world? I'm not sure that's right in the world. So look, I think Aave could be dramatically undervalued. That doesn't mean it won't continue to face trouble and it's not at risk. High risk, high reward. But if you're looking for something that could 5x or 10x quickly, I think some of those OG DeFi apps fit that bill.
And numbers aside, why are you so bullish on Aave?
Oh, I just think it's phenomenal service. Have you used it? It's like magic, right? It's actually like a magical experience to use it. So look, it faces existential challenge. It has some issues with its tokenomics that it's working for. If it were perfect, it would be already valued at 10 or $15 billion. The thing that's interesting about it to me, it's a really important financial primitive that's valued at $1.5 billion. That's not much, right? So if it can fix the tokenomics, if it can get over this challenging period that it's in, if it can build more resilient system, I think you could re-rate that up pretty substantially. Bullish, because I think we're gonna end the year significantly higher than we are today. From a short-term perspective, I think what we said at the beginning of the year is still true, which is we're stuck in this channel between 60 and 80K. Until we break out of that, I would expect that to continue. But for most people, look, a year from now, we're gonna be much higher. We have major institutions coming into the space, huge institutional flows. I'm pretty long-term bullish.
And yesterday you were at an institutional event yourself and you can believe how bullish everyone was.
That was the incredible thing. I was just at a normal advisor conference, right? Nothing related to crypto. There were about 170 financial advisors in the room. The start of my talk, I asked them how many of them personally held Bitcoin or crypto in their own portfolios. I thought it'd be like 20, maybe 30. It was 150 people, almost everyone. It shows you how much we've normalized crypto, right? You have Morgan Stanley launching a Bitcoin ETF. You have Goldman Sachs launching a Bitcoin ETF. You have Charles Schwab saying 2 to 7% crypto. And then I'm boots on the ground, a room of 55-year-old financial advisors, they all own crypto. I think it tells you where this industry is going. It made me extraordinarily bullish for the next few years to come.
Absolutely, and Bitwise itself, you guys have 10, 11 ETFs already in crypto and a bunch more on the way as well. I mean, outside of Bitcoin and Ether ETFs, what do you expect the best performing crypto ETFs to be this year?
Look, I'm really bullish on a number of the layer one blockchains focused on stablecoins and tokenization. So I think things like Solana are very well positioned. I think things like Avalanche are very well positioned. It's not an ETF format now, but I think most DeFi protocols are dramatically undervalued and will be re-rated this year once we get through the Aave mess and we start making some improvements on tokenomics. So I'm broadly bullish, but in ETF land, I would say Solana looks relatively cheap right now. I would say Avalanche looks relatively cheap right now.
I was talking to the Bitwise Asset Management president a little while ago, and he said Bitcoin and Ether are like the obvious 1 and 2, and then Solana is like the maybe third position, but it's still a little bit of a mile away from those top two. I mean, where do you see Solana sitting right now? Are you on the same boat, third potential, or?
Yeah, absolutely. Look, I think the reality of the layer one space, the programmable layer one space, it's likely to be an oligopoly of a number of high-performant, high-quality chains, maybe 3, 4, 5. Ethereum is the clear leader. I'm very bullish on Ethereum. Solana is one of those competitors, right? You look at Solana, you look at Avalanche, you might look at Canton. Those are among the viable competitors. And I think relative to its market cap, it looks pretty cheap, right? Its market share is larger than its market cap. That's often a good comparison to make. Makes me bullish.
Yeah, let's talk about Solana more, because I think crypto viewers love.
One of the key themes Hougan emphasizes is regulation, specifically the anticipated Clarity Act. Interestingly, his perspective is not centered on whether the law passes or fails. What matters more is resolution. Markets struggle with uncertainty more than bad news. As long as regulation remains unresolved, capital tends to wait on the sidelines. Institutions, in particular, are not built to operate in ambiguous environments. They require defined rules, compliance frameworks, and predictable legal structures. So the real catalyst is not necessarily a favorable regulatory outcome, but the removal of uncertainty itself. Once the market moves past this phase, capital that has been waiting can finally deploy with confidence. This aligns with how traditional financial markets behave. Large pools of capital do not react impulsively. They wait, assess risk, and then move in size once clarity is established.
Solana price points and where it's going. So if it's cheap right now, what can we expect by the end of this year, given the current conditions at the moment?
Well, look, if you look at the relative performance of coins recently, you've seen Bitcoin and Ethereum outperforming, in part because you have both institutional ETF flows from major platforms and you have corporate treasury buying. Solana hasn't benefited from the corporate treasury buying, and it's early to the institutional flows because those start with Bitcoin and ETH. But I suspect that they are coming. So where could it, it'll certainly be, not certainly, there are no guarantees. I think it'll get into the triple digits. I think it'll rally back. I think it'll be outperformant for the end of the year. Yeah.
Amazing. And Bitwise in December, I believe, filed for a number of other ETFs as well. Aave was one of them. Tron was another. I mean, at this point, are you kind of just spreading your bets across everything, or is there still a process where you're looking at each individual project, or what's the process there?
Yeah, look, we're absolutely pretty selective, right? We just launched a Chainlink ETF. I think that's an absolutely fascinating area of the market. We just launched an Avalanche ETF. I think that has one of the more legitimate shots, differentiated architecture on how to build a layer one. We file for a lot of ETFs to give ourselves optionality, but we launch ones where we think the protocol has a meaningful chance of real success in the world. Look, I think the funds that we have out there are pretty interesting in that regard, and there'll be some more to come for sure.
Absolutely. We're seeing, Canary Capital, I think, filed a Pepe ETF recently. I mean, is Bitwise going to be launching a Pepe ETF anytime soon?
If only we could put pudgy penguins into an ETF, we'd be all the way there. Look, Pepe is not on our radar, but God bless the team at Canary for taking the shot.
Can you tell us though, I think a lot of people now look at ETFs as a form of legitimacy. Like if an institution is launching an ETF in that crypto, people look at it and go, well, it must be something. I mean, what's your thoughts on that? Does it add this layer of security for your everyday investor when they're looking at what crypto asset to invest in?
Well, for sure, it doesn't guarantee that there will be a success. And I would say even of the ones we're filing, we're not guaranteeing that those will be a success. We're just saying that they're interesting projects with a meaningful shot of capturing real value in the future. It may go their way or it may not go their way. What an ETF does is it brings it into the regulated perimeter. There are a number of risk tests that it has to pass to get an ETF. So it's a positive stamp of approval, but you shouldn't look at it all as a guarantee, right? These things can go up, down, they're volatile, but at least at Bitwise, we're pretty careful about what we launch.
Yeah. I wrote a letter at the beginning of the year, and in it you'll find a matrix of the correlations among asset classes, and specifically trying to understand Bitcoin. Many people, because we call Bitcoin digital gold, they think, oh, well, surely it's highly correlated to gold. It is not. In fact, and we did the analysis from 2019, which is when real institutional interest started evolving a little more intensely. The correlation between gold and Bitcoin over that time has been 0.14. But if you look at the last 2 cycles, you'll see that gold rallied before Bitcoin did. And we think the same thing is happening now. And we monitor Bitcoin to gold, and I feature it regularly in something called In the Know, which I do once a month. And on that chart, you'll see, yes, Bitcoin relative to gold has had a significant drop. But if you look at the longer term, you'll see higher lows in terms of the very long-term trend line. And so we think that the Bitcoin bull market is still intact. I realize we've been through what many would call a bear market, and yet down 50% is a victory compared to down 85 or 95%.
Bear market for ants, Kathy.
Yes, exactly. So, that is still intact. And we do believe that Bitcoin will get to new all-time highs in this next cycle. Many people don't, but we do. And you know that we're on record saying that our base case for 2030 is 730,000. Our bull case is 1.5 million. We took a lot of flack or I did, for saying that stablecoins had usurped some of the role of Bitcoin, which is true, certainly in emerging markets. But what people missed when I was making that statement was that gold was rallying. So the store of value role of Bitcoin is also moving up. And in fact, the two cancel each other out. Actually, the stronger move has been gold relative to Bitcoins in terms of the impact on the Bitcoin price. So we think that we're in the bottoming out process. David Puel, who does our on-chain analytics, says the absolute capitulation would occur, meaning we may get there. I doubt it, the way Bitcoin and other assets are acting, but that drop dead price range is in the 50 to 55,000 range. As I said, and you also are alluding to, we're seeing liquidity moves around the world. And many people, because the headlines are always talking about the Fed being hawkish, not wanting to ease. Well, guess what? The Fed funds rate is down 175 basis points. Yeah. And yet the narrative out there is, they're too hawkish. They have started easing. And I think we're going to have... I think because inflation is going to surprise dramatically on the low side of expectations, and I'll give you an anecdote, Pepsi. Now, what the heck does Pepsi have to do with this story? Well, we noticed that Frito-Lay I'm going to say about 3 months ago, cut its pricing 15%. And today it announced that its volume surprised relative to expectations significantly. That's what should happen in a low inflation world. You cut prices, you get more unit growth. And that's certainly the case in the technology world. And we're seeing massive deflation with AI training costs dropping 75% per year, AI inference costs, so how much does it cost ChatGPT to answer your questions? Those costs are dropping 85 to 95% per year. So I think we're going to see a massive wave of good deflation out there, and that is you cut prices, you get.
Hougan remains strongly bullish on Bitcoin itself. He suggests that a 10x move by 2030 is within the realm of possibility, implying prices could exceed $1 million under favorable conditions. The core argument is that Bitcoin is still undervalued relative to the size of the market it is targeting. As a global store of value, it competes not just with gold, but with broader financial assets. Interestingly, data shows that Bitcoin is not highly correlated with gold. Over recent years, the correlation has been relatively low. However, market cycles suggest a pattern where gold often moves first, followed by Bitcoin. This could indicate that Bitcoin is still in the process of catching up in its role as a store of value.